Welcome, and now let's settle for the details. The woes of the Ghana Cedi deepens despite the inflow of the $600 million International Monetary Fund package. This is due to some payments of energy sector debt to power producers. At least this is what Joy Business has picked up from some currency traders with commercial banks. George Yafe has more.
The Ghana Cedi since the last quarter of 2023 posted one of its longest relative stability against the US dollar. However, it started recording some blips last month. Some industry watchers described this development as interesting, especially at the time that Ghana managed to pass its first program review with the IMF and later received the first tranche of cash during that month. But some currency traders working with the banks have told Joy Business that there has been some fresh payments made to the power producers in the energy sector to prevent any outages, which has largely contributed to the sudden pressure on the Ghana Cedi. This sent signals to the market that the Bank of Ghana's reserves could be coming under some pressure, coupled with the normal demand from businesses that want to restock for the year and some payments made to the agri sector. However, news of the Bank of Ghana's reserves has crossed over $6 billion, well as the more than $300 million from the World Bank that should be coming in soon could change this trend. But for some, unless you cross the first quarter of this year, they will still argue that the stability of the Ghana Cedi is yet to be tested.
Meanwhile, currency analyst with Data Bank Koomson is predicting the local currency will witness marginal depreciation this year owing to the volatility on the market. According to him, because 2024 is an election year, foreign investor participation in the market will be limited, thus having a toll on the Cedi's performance. He spoke earlier on the marketplace.
In terms of how long that will continue, I think looking at the market, you realize that it's still if I should use the word, mimicking some of the volatile portions or episodes we saw from last year, where demand is on and off in an undulating manner. And as such, we are likely to see such volatility as well in the market. And it's also good to keep in mind that this year being an election year, typically you would see foreign investor participation in markets quite limited, both on the fixed income side and also on the equity side. And as such, the liquidity typically they would introduce into the market to help stem all these demand pressures may be quite absent. You get it. So I think that's also one of the reasons that's contributing to this demand. So generally, for the Cedi this year, we are likely to see a depreciating trend, although you realize that this trend is not as steep as we saw in the first quarter of last year, where I think by mid-February, the Cedi had lost about 11% year-to-date, as compared to the 2.21% we are seeing currently. I think in the short to medium term, looking at how we progress generally in the deal and getting clarity more on the commercial data, I think looking at, or if I should break the demand of FX down, the speculative bits of demand would really still thrive on the uncertainty as to the terms of restructuring on the external debt and how we feel that will play for external buffer, or the strain it will present on our external buffer. And we feel if Ghana is likely to get a moratorium like we've got on the bilateral debt side, then at least the reserves can be rebuilt sustainably, or the external buffer can be rebuilt sustainably, strengthening the central bank's intervention to smoothing any movements, erratic movements in the Cedi. But if the terms are not so much favorable, then it's it will be quite a challenge.
The Chamber of Independent Power Generators Ghana has vowed to pass on the cost of power to consumers if government goes ahead to implement the Emissions Levy Act. The chamber described the act as a political risk which will increase the cost of power. According to Chief Executive Officer of the Chamber, Dr. Eliklim Apetokbo, the emissions levy would trigger an increase in electricity tariff. He spoke to my colleague, Pius Kojobaka, earlier on the markets, please.
I described it as a political risk. Political risk comes in many forms with their unique implications for businesses. And in our case, as power generators, we call this a change in law that has implication on our cost buildup. And what that means is we have a fixed tariff for our PPA term, that is for the number of years that our contract is. There can only be a change in our tariff when there is a change in law that results in cost implications. And that is exactly what the Emissions Levy Act represents. So in the implementation of our agreement, we have an understanding or a clause that suggests that anytime there is any issue, like a new regulation, new directives, that adds to our cost, this cost should be passed through to the distributor, then to the end user. That means the statutory incidence will not rest with us, the generators. It will be passed on to the end user. Once it is implemented, I think we're also ready. If we have been served our liability to pay, we pay, it must be transferred as soon as we have remitted funds for it. So it's its immediate effect.
Now, some workers of the National Lottery Authority, NLA, are demanding the immediate dismissal of the Acting Director of Finance, Ernest Morty. According to the workers, Mr. Morty has been in active service for the past 30 years. Joining us on the back of this is Chairman of Financial Business and Services Employees Union at NLA, Eric Tamaklo. Mr. Tamaklo, thank you very much for your time this evening. We understand tension is rising at NLA. Can you bring us up to speed on what is happening?
Thank you very much. Good evening. If I kept receiving calls today with regards to tension at NLA and so on and so forth. But let me be quick to put on record that with regard to a contract extension of one of our directors in the person of Mr. Morty, for me as a union chairman, local, we have not even received or even get to know from management with regard to their intention to award him the contract or not. So as I speak to you, it is just rumors that we are speaking on the ground. But then again, if somebody is paying attention in terms of staff, uprising and so forth, I don't think that it is appropriate to associate the union to this tension, so to speak. Unfortunately today, I have not been feeling well, so I couldn't go to work today. But I received calls to the effect that there were some protests at our gate and some red bands that some staff are demanding the immediate dismissal, or if you call it, a stop to an intended extension of contract of Mr. Morty. Well, that is not something that we can trace to the leadership of the union as we speak. But like I said, we are yet to get really official information from management to the effect that we intend to give Mr. Morty a contract.
Okay, but can you confirm for us if Mr. Morty has been working for the past 30 years and is due for retirement, but again, there are rumors of an extension of his contract?
Yes, I admitted to the rumors on the ground, right? With regard to him working 30 years, well, I met him, I came to meet him at NLA for 20 years now. I don't know when he started, but he was there before I joined 20 years ago, okay? So yes, there are rumors on the ground that there is an intention from the management and the board to extend the contract, which I cannot confirm.
Okay, but as a union, what is the way forward? Are you going to investigate the issue and act accordingly?
Well, this is a matter that the leadership of the union even had a discussion on extensively. For us as a union now, NLA is dealing with a lot of issues. And at that meeting, I recall what came up has to do with the fact that currently, for the past 3 weeks, we have petitioned management and we copied the board with regards to some policy decisions and directives that are not helping the business. Policies that we believe are intentional to probably create more problems for NLA. And so, I think that the director has done well to engage the leadership of the union on this matter. Some which are internal are being handled. But the policy decisions, the director promised that he's going to engage the board and get back to us. So these are matters that the union is focused on. The policy direction of NLA. Over the years, what we have been doing well, contributing so much to the consolidated fund. Today, we cannot even contribute some money to consolidated fund, not to talk about even revenue generation to meet some of our overheads and so on and so forth. So the issue with regards to NLA and the management of NLA has gone far beyond just focusing on just the contract extension of the tax. And let me put on record that yes, at 60 years, you are supposed to be retired. But then again, we are also mindful of the fact that the law, the labor law, to make provisions for contract extension. If somehow the board and management deem it fit that in the absence of the finance director, maybe there is a problem in the finance department. Well, the union is not focused on that. We are focused and we are waiting for the director to come back to us and update us with regards to the policy decisions that are man-made and that are creating problems for us. And I believe that in no long time, we may have this discussion again because the union is focused on demanding accountability from management and the board with regards to policy direction of the company. That is where we stand as a union.
Okay. Thank you very much, Mr. Tamaklo. Eric Tamaklo is chairman of the Financial Business and Services Employees Union at the NLA. My name is Emma Davis and you're still watching Business Live. We'll take a quick break. We'll be right back. Welcome. A look at the rest of our stories. Only 14% of working Ghanaians are satisfied with their financial situation. That's according to the 2023 Old Mutual Financial Services Monitor. Here's more in this report.
The report indicated that lower income earners as well as informal sector workers are the most financially stressed. 68% of those financially stressed are in the informal sector, whilst 55% are in the formal sector. On dependent, the report revealed that the incidence of dependent is high. Less than half are sandwich generation individuals in Ghana, significantly higher among older and more affluent consumers. For most, their dependent children are their own, while only 13% have dependent children belonging to somebody else. In terms of financial priorities, income security is the top priority for Ghanaian consumers. This is followed by managing their expenses downward, such as putting major expenditure plans on hold, switching to more affordable retail brands, amongst others. Paying off debt emerged as a sixth-ranked priority.
Let's have a discussion on the back of this, and joining us is finance lecturer at the University of Ghana Business School, Dr. Benjamin Amoah. Dr. Amoah, thank you very much for joining us. How worrying is this when we are learning that only 14% of Ghanaian working class say they are very satisfied with their financial situation?
It is indeed worrying, but again, we should not be surprised because what is happening clearly is coming from two major areas that we can consider. One is that life expectancy in Ghana is increasing. What it means is that we have a lot more individuals who are aging into their 70s, 80s, and even exceeding 80s. And these are our parents and the elderly who will need some help from many of us who are working. We shouldn't also forget that the population of Ghana has been classified as being youthful. So you have another chunk of the population who are depending on the working adults, people between the ages of 35 to about 50 for some form of support. So if you find yourself in this income earning bracket, then definitely there will be some form of financial pressure on you. We should not forget that the individual will have to understand his income in terms of the assets that he owns and then the liabilities or the debts that he has to see to. If you are not able to manage this, considering the responsibility you have in terms of caring for the elderly and also taking care of your children or other dependents on you, then it becomes a problem. So this is clearly what the average Ghanaian is confronted with when it comes to managing his personal income as well as that of the household income that he or she must live on.
Jock, in a minute, how do we change the narrative? Is there a way out?
Absolutely, there's a way out. What can we do? What we can do is that we need to be taking personal financial management serious. And here, we need to, at best, follow the financial institutions to lead the charge in educating and providing some form of personal financial management in the area of budgeting, the area of income, the area of savings, and spending management. Why? Because our school system has greatly neglected this vital area of personal financial management across, right from the primary level all the way to the university level. We don't have any clear subject that provides this lifelong important skill set. So many of us have a problem when it comes to money management, and that is what is showing up. And going forward, if the school system has not been able to do that, the financial institutions, the banks, the pension funds, the insurance companies and investment companies who stand to benefit when individuals contract loans and save have the prime responsibility of providing this very important and vital knowledge set in the area of personal financial management.
Thank you very much, Doc, for your time. We hope this changes and we'll be able to be comfortable. Now, moving on, the Bank of Ghana has launched the beta version of the Bank of Ghana database portal. The portal aims at providing a single environment for extracting and visualizing macroeconomic data. A statement from the central bank said the portal is in line with the international best practice and the bank's motive to move digital. Now, we are joined by Dr. Philip Abredu Otu, and he's going to give us more on the back of this. Hello, sir.
Hello.
Thank you very much for making time. Can you tell us a little more about this new development?
Well, so the bank has been working on this for the past 1 year, and what we've been doing is that we wanted to bring electronic data more closer to our partners. The data requests that we do get from the general public on matters bordering on the economy is huge. And we thought that we needed to move beyond just delivering the data to these people who come in to ask for data and to move forward to
Hello. Kindly unmute for me, Dr. Abredu Otu.
Yeah, is it okay now? Can you hear me?
Yes, please. I can hear you.
Yeah, so I don't know where I left off, but I was saying that we get a lot of data requests. It comes from so many places, not only from domestic, but from external sources. External investors are always requesting for time series data. You get students from University of Ghana, University of Cape Coast, and all the universities sending in letters to the Bank of Ghana for data. We thought we could make life a little bit more simpler for ourselves and for them. And about a year ago, we started gathering data on key macroeconomic indicators. Remember that the economy can be organized and structured along 5 main sectors. So we have the external sector, we have the financial sector, and then we have the fiscal sector, and then we have the monetary sector, and then we have the real sector. And we've added a little bit to survey-based indicators because the bank is also involved in surveys, and we are sharing the entire history of the database underpinning our surveys to the entire public, so that anybody who is involved in research, anybody who is involved in policy research, the think tanks, academia, they can just come straight onto this portal. And if they are able to tell exactly the data they want and where it belongs to, be it external, financial, fiscal, monetary, and real sector, they can just get in there and pick the data that they want, and the output comes in a .csv format, which can easily be saved into Excel format and then be used for analysis. So that was the motivation. We started a year ago. The data, some of the data go as far back as the 70s to date. Our data has data up to December 2023. So where possible and where the data is available, we've gathered information from a lot of institutions, from the fiscal sector, from Ghana Statistical Service, of course, with all the data they have, and we've put all these things together and we've unleashed this data to the general public.
So is it safe to say that anyone from the general public can access this anytime, anywhere?
You can access this anytime, anywhere, anywhere in the corner of the world. Once you have internet access, you just hop onto the BOG website, look for the section which says database portal, and then begin to dig and pick up the data that you want. It's also good for us because in the end, it also brings some credibility to the work that we do, because then people are able to verify the data against what we do. The data speaks for itself, and people can easily try to get into the mindset of the central bank when it comes to policy making, because the data is there.
Okay, thank you very much, Dr. Philip Abredu Otu. He's the Director of Research at the Bank of Ghana. On that note, we end Business Live today. My name is Emma Davis. For more business news, do log on to myjoyonline.com. Have a good evening.